Hello investors, today I'll speak about dividend stocks, about top 3 dividend stocks to buy right now and of course receive a nice passive income. So let's start with the first company for today. It's CVS, healthcare's sector, and current dividend yield more than 3%. Let's have a look previous on it fundamental parameters of this company. So we see a market cap about 100 billion bucks, dividend yield more than 3%. This company founded more than 50 years ago, and the amount of employees now is more than 300 employees. So the CVS Health company is a health solution company which engaged in the provision of healthcare services. It operates through the following segments: pharmacy services, retail or long-term care, healthcare benefits, and corporate and other. The pharmacy service segment focuses on the pharmacy benefit management solution, and the retail or long-term care segment includes the sale of prescription drugs and an assortment of health and wellness products. So the current valuation, we see a P ratio of 24 and the PS less than 1. The PS is very cheap. The PE it's not so cheap as now. Let's have a look at the profitability of this company. We see that last 4 years it was a profitable company, and the last net profit margin about 1%. The gross margin is 17. It's not so high, but still this company continue to pay a nice dividend, and please pay attention that the revenue of this company is for the last year continue to grow. Let's have a look on the revenue breakdown. We see by the revenue by source that the pharmacy services give more than half of its revenue to the company. The second one is retail, and healthcare benefit give about 1/3 of its revenue total. Let's have a look, of course, to the dividend. The current dividend yield is now about 3%. The payout ratio is 72. And we see that the company is stable for the last 5 years. Continue to pay to its shareholders a nice dividends. Also, let's have a look on the debt. We see that the amount of debt for last 4 years is decreasing. 2019 the debt amount was about 90 billion bucks, and for last years it decreased to 70 billion bucks. So now we, of course, don't forget we are in area environment of elevated interest rates. The Fed fund rate now is 5%, so of course the interest payment is now continue to decrease. So it's very good position for the company management. And let's have a look, of course, on the chart. So it's a weekly time frame. In my mind, here it was an impulse, the first wave, the second, the third, the fourth, and the fifth. Here the impulse finished, and now we had the ABC move, a correction, clean ABC move. And also I think that wave C here may be finished, because look, if I used the Fibonacci levels, so this one, the wave C, if C finish here, it is already between the level of 100 and 160% from wave A. So most probably the finishing of wave C is very close. It can be in this area about 70 bucks per share. So most probably the correction here is finished. So there is, in my mind, of course, there is high probability that this stock may start to bounce. And also don't forget that it's quite big company, very stable, and the dividend yield, of course, more than 3%. I think it very nice. And also pay attention to the momentum indicator here. The RSI on a weekly time frame is 32, so it's telling us that the stock now already oversold. It's also can signal us that now it can be a nice time to purchase this company's stock. Let's move to the next one. So the next company for today, it's WBA, Walgreen Boots Alliance, with a current dividend yield more than 5%. If I look at the chart in my mind here for last 10 years, it was a range actually. The waves, it was the first, the second, the third, the fourth, and the fifth. So most probably the correction is finished here. And also pay attention that now we trade at the lower border of this range. So there is in my mind a nice probability and possibility to grow from current level. Let's have a look on the fundamental parameters of this company. So market cap is more than 30 billion bucks, and the WBA engages in the provision of healthcare and retail pharmacy services. It's operates through the following segments: US retail pharmacy, international, and US healthcare. The company also has its own drugstore. So in my mind, very stable business. If we look at the revenue and the income and marginality of this company, we see that for the last year the marginality continue to grow. We saw it in 2020 when the COVID crisis, it was less than 1%. 2 years ago it was about 0.5%, and for the last year the net profit margin more than 3%. So we see that the efficiency of the company is increasing. Also for last 5 years it's a steady profitable company, also another positive sign. And of course the revenue of this company is very stable. Actually it's the same at the same level as 2018, but I'm not expecting that it's not Google, it's not Apple. Yeah, I'm just want to receive my 5% of dividend yield. If we look at the revenue breakdown, so by regions, we see that in US the company earned more than 80% of its revenue, and about 9% the company earns in Germany, and UK is about 6%. Also by segments, we see that the pharmacy business accounts more than 60%, and the retail segment is about 26%. Let's have a look on its dividend. We see that the dividend yield now is more than 5%, and of course the company continue to even increase its dividends payments for the last years. We can check it here. So dividend yield is 5.4%. The dividend increase track record is 47%. So very impressive history of dividend payments. So the company already is a dividend king, and of course the annual 3-year dividend growth is more than 2%. So very nice companies that paying dividends that are increasing for the last 47 years. The next company for today, it's Abbvie, BBY its ticker. So if you look at the chart in my mind, for the last 3 years we are traded in the increasing channel. Now we traded very close to the middle of this increasing channel, and of course I'm expecting to see the stock a little bit higher. In my mind, the growth potential, let me check for 1 minute. So the growth potential here is about 10%. Also dividend yield 3.6% for Abbvie right now. We see market cap 185 billion bucks. Also, of course, it's a healthcare company. It's a research-based pharmaceutical company which engages in the development and sale of pharmaceutical products. It focuses on treating conditions such as chronic autoimmune disease in rheumatology, gastroenterology, and dermatology, oncology, including blood cancers and a lot of other stuff. Let's have a look on the valuation. Now we see that P ratio is 24. I think it's very close to its average PE value for the last years. And please pay attention to the increasing in its revenue and net income. We see a revenue, a very nice revenue growth. Most probably it's very close to double in last 5 years, and of course the marginality also increased. For last 5 years, if we're speaking about 2018, it was 17%. For the last year is more than 20. So marginality very impressive for this company. We see a gross margin 72 at net income margin more than 20. So for me, it's of course highly marginal company. Let's have a look on its revenue breakdown. So most of this about half of its revenue the company earned in immunology, and if we speak about the breakdown by country, so about 80% the company earned in US. Also we see that in Germany company earns about 2% of its revenue. Canada also 2%. So very diversified geography for this company. Let's have a look on the history of dividends for Abbvie. Dividend yield now 3.6%. The dividend increase track record is more than 50 years, so it's actually we have a dividend king in front of us. The annualized 3-year dividend growth is more than 9%. So of course 50 years of dividend increasement. It's for me it's very impressive figure. And also please pay attention to for the last year the company is decreasing its amount of debt. It was about 87% 2 years ago. Now it's only 64 billion bucks, and the amount of free cash flow also is continued to increase. 5 years ago it was 12 billion bucks, and for the last year it more than 24 billion bucks. So the free cash flow is the amount the company actually can invest and make some M&A deals to pay dividends. So of course it's very important parameter for each public company. And now I will give you another bonus, some kind of bonus for today. It will be the fourth stock for today. It's also a healthcare stock. It's Pfizer. Let's have a look quickly on this stock. Just for me, it's like a gift. So look, the chart. My mind it was ABC move, a correction. Then it was now we are in impulse. The first wave, the second, the third, the fourth, and then I'm expecting to see another move up. It may be the fifth way. So I'm actually expecting to see the stock more than 60 bucks. So it's my view on its technical analysis. Also the momentum indicator there is side 36, so the stock already oversold. Also looks the last time it was the corona and virus in the pandemic lows. It was also the momentum is so low, such low. That's why I'm thinking now it can be very nice time at least to consider buying shares of this stock. The dividend yield is now 4%. Let's have a quick glance of the fundamental of this company. So I think most of you know this company. Pfizer, market cap more than 200 billion bucks, dividend yield 4%. Of course it's a research-based global pharmaceutical company. It's engaged in the discovery, development, manufacture, marketing, sales and distribution of biopharmaceutical products worldwide. Of course it had a drag from COVID-18, so this company earned a lot of money last years. The P ratio is only 7 and the PS 2.2, so the price per earning is very low. Later I will check it closely. So we see here a very strong grow in its revenue actually last 3 years. Of course, because of the corona, we see that also the marginality improving. Last year it was the net profit margin more than 30%. And of course, last year it was the record in spite of revenue. So this company earned really a lot of money. Most of it in the US. 42%, and in developed Europe is about 20%. And if we will check a dividend history, so the dividend yield is 4%, the dividend increase track record 12%, and in the last 3 year dividend growth is more than 3%. So actually it's a nice dividend company to own in your portfolio. And please pay attention, the dividend payout ratio is about 30%. It means that only 30% from its net income company pays as a dividend. So in my mind, here is a great window, great room even for the company, for Pfizer, to increase its dividend payment to shareholders. So it was my view for today for dividend stocks, based dividend stocks that you may buy now. Most of these companies are from healthcare sector. We see that Pfizer pay you 4% dividends. Abbvie, the dividend yield about 3.6 WBA, more than 5, and CVS company, of course, the dividend yield also more than 3%. So if you like this video, please press the like button. You also may leave a comment, your view, share your opinion about these dividend stocks, and see you on the next time. Bye.